quite an interesting one, Santosh. What are the thematic fund strategies that you have been recommending to your investors in the recent times?
Well, I'll be honest with you. I'm very wary of recommending any thematic ideas because, like you mentioned, in the starting, I got 20 years, and in this 20 years, one of the lessons that I've learned is thematic schemes perform like beautiful roller coasters. They start low, they take you to a high, they bring you low, they take you to a high, they bring you low, and they leave you back to where you started. I would rather, if my clients or anybody were willing to listen to me, build a more robust, diversified equity fund portfolio. But today, the situation is a lot more different because there are investors who are so discerning and they're willing to take that risk or informed decision that we can mix up 3-4 unique themes and make it that into it as a diversified portfolio. Then what we do, we try and do negatively correlated thematic schemes. For example, I take the infra space, I take the IT space, and then maybe I add the metals or the logistics space. What I'm trying to do, I'm trying to stay away from the generic diversified funds. I'm trying to not take a risk on one theme, but use 3-4 themes to build a portfolio. So that's what I do. Now that is also depending on the opportunity that I get. So today, when we look at IT, thanks to the correction since Jan 2022, if today you were put a gun to my head, I'd say one could start looking at the IT space because it's come off the 2021 highs. The entire hype of the IT craze around the world, not only in India, it's come off. Today, everybody thinks IT is a sell. But maybe it's a great opportunity if you have a 3 to 5 year horizon because the cycle is going to turn around, if not now, today, later. In 2007, 8, 9, IT, infrastructure, and capital goods were just running up. Any stock or sector that you bought, or even the fund that you bought, would give you 50, 70, 100% return over a 1 or 2 year period. Today, nobody's talking about them. Maybe it's an opportunity to look at it right now. So, though I don't have favorites, I purely go by need of the client, the opportunity present based on the opportunity of the sector and the recent 2-3 years performance of lack of any great enthusiasm over there, because usually that's the turning point in any sector, right? Though great returns are not an indication of future returns, but we know for sure significantly subdued returns may be a great opportunity to catch for a turnaround in that particular sector. Some of the things that we got right over the last couple of years, more from a thematic call, is that we've, over the last 5 to 7 years, for few investors who wanted that extra exposure, our BFSI, banking and financial services, have done better than the market. Number two, our slight exposure to even commodities like gold, silver started in Jan 2022, and even some metal index have helped us, number one, hedge the portfolio. Number two, keep it slightly away during extreme market volatility. So gold in March 2020, when the markets were down 35-40%, gold was up 20-25%. See, the two things that gold does: one, when the markets fall, it doesn't fall. Two, when the markets, that is equities, fall, that's when gold typically does well. So 2 Marches in the last 2 years are a great example of how, if a particular theme is understood and done well, can work for you. So March 2020 and March 2022, if you bought gold before that, it prevented a loss and gave you a slightly better post market aggregate return. But if you bought in March 2020 or March 2022, in both the cases, in the next 1 year, you made a loss because you bought gold at the top of the cycle. Likewise for IT, likewise for infra. Therefore, my one simple suggestion to all of our viewers is, please do not chase return. If you like a particular theme or idea, buy it before it's popular, not after it's popular or while it's becoming popular.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.